And Andrew, tell us a little bit about your firm, which does something unique in the ETF world, and how individual advisors can benefit from it.
Well, we brought WallachBeth to the market 6 years ago to serve buy-side and any retail customers, advisors, RIAs, to better serve best execution in ETFs. We felt there was a real need for that execution in ETFs because they tend to trade at something other than what they're worth. Right? They have an underlying net asset value, and the product can stray from those.
And you're talking specifically about the ones that are less than the major ETFs.
Correct. So we help them have advisors and our clients feel more comfortable getting a better execution.
So that narrows the spread. So what should advisors who are interested in those in ETFs in general, what should they be aware of in terms of the trading of ETFs? How does it influence their decision-making about which ETFs to choose?
Well, they're exactly structured. They're 40 Act fund, right? So they're exactly structured like a mutual fund. However, they trade during the day and they give you that benefit, right? The first things we tell them to look out for is, be wary of openings and closings. Openings, everything's obviously not open, and closing print is a non-kind of competitive auction market where it just prints on the primary. Other than that, we teach them to look at the underlying asset class. Is that product liquid? Is that product open? Right? If they're trading a bond ETF, are they going to trade it after the bonds are closed? International products trade fine when the international markets are closed. That's the beauty of the ETF. But we teach them how to kind of look for the pricing and even simple things like using marketable limit orders.
And what, if there's a takeaway, what should an advisor know who's interested in some of the less liquid ETFs? What should they be aware of that would help them do their job better?
I think what they just need to understand is that the ETF itself is illiquid, and the underlying asset class, more importantly, is illiquid. So now you have both problems, right? You're looking at a wide spread, and the underlying asset class is kind of murky. What you need to do is kind of get an idea, perhaps, of the NAV, even from yesterday, of that product, like if it's, or it's just wide. Imagine trading European small cap bonds, right? Or high yield bonds in Asia and trying to translate that to the US. So you're going to pay the same freight. The ETF just makes it easier. What you need to look for is multiple maybe bids and offers from your, call up your wirehouse, get multiple bids and offers, but mainly try to find what the intraday net asset value is, and you can get that on Yahoo Finance as well as Bloomberg.